talks about the investor and associate ka consolidated financial statement. How to prepare? Here also we need to prepare consolidated financial statement, but this is between investor and associate company. What, sir? How it is an associate, sir, or when it becomes associate, sir? So for it to become a subsidiary company, you should have a control. Okay. But if an investor does not have control, but if he has something called significant influence, he doesn't have control, but he has something called significant influence, then the other company, no, sir, you don't call it a subsidiary. Wherever you are investing, the other company, we call it as associate company. So associate company is that company where the investor does not have control, but they have significant influence. So when do you get significant influence? So as a thumb rule, if you own 20% or more, if one company owns 20% or more shares in another company, then we say with 20% more or share, you will get significant influence. Is that okay, sir? But more than 50% is control, no, sir? Yeah. This percentage is 20% or more up to 50%. Because if you are owning more than 50%, you will not be an associate, you will become subsidiary company. So it is 20% or more up to 50%. Like that. So in this case, how to prepare consolidated financial statement is what we are looking at. Done, Asarji? Okay. This is one. Alright. So this is very simple. This, no, sir, here. In normal consolidation, what you used to do, just now we did, tell me. Holding company ka all assets and liability you will take. Subsidiary company ka all assets and liability you will take and add 100% addition. You'll go on adding. Sir, if it is an associate company ka assets and liabilities will not be shown in consolidated financial statement. I'll repeat this. Associate company ka assets and outside liabilities will not be shown in consolidated financial statement. Sir, when you did subsidiary consolidation, did you show investment in subsidiary? When you did subsidiary consolidation, did you show investment in subsidiary company? No. Instead of investment, you showed goodwill or capitalism. But in in associate consolidation, investment in associate company will appear. Instead of assets and liabilities, you show investment in associate company like this. Because we don't control the associate company, no? So showing assets and liability will not make sense, but only we will show the investment. So that means what is this consolidation? Sir, it was very easy, sir. Not easy. There are some dramas here also. This investment you have to show in CFS. CFS means consolidated financial statement. Sir, at what value will this investment come, sir? For that, we use a particular method called equity method. We use a particular method called equity method. So this investment will not come at cost. Let's say here investor to pay this 20%, investor paid 10 lakh rupees. Investor, one company A Limited, they acquired 30% shares in one company. With 30%, will you get control or only significant influence? Only significant influence. For this 30%, let's assume that they paid only 10 lakh. That means 10 lakh is a cost. This investment will, an associate will not come in consolidated financial statement at 10 lakh, at some other value. So how that some other value will be derived, that equity method will give you the guidance. Okay, that's what it's trying to say over here. It does not come at cost, it will come at some other value. Okay. One easy way to remember this is match your investment to associate ka performance. Match your investment to associate ka performance. Now, if associate company makes profit, you will have a sad face or a happy face. You will have a happy face, correct? No, because your investment value will be same or it will increase. So if associate company makes profit means investment value will increase. If associate company makes loss means investment value will reduce. So 100% extent, sir. Will you, if associate company makes profit, 100% of profit will you get or only your share? Our share. Or if I'm sorry, you are a share or you are equity shareholder, sir, you will not get profit, sir. You will get net assets, sir. Yes. If any company reports profit, no, their net assets will not be same. Net assets will increase. Net assets will increase. Okay. You visualize the simple things. You sold the goods. You purchased the goods for 100 rupees. You sold it for 120. That means you made profit how much? 120. When you sell the goods and if you don't recover the money, you're okay, you made a profit of 20. Agreed? Sir, when you sell the goods, you will show debtor at 120. So when you make the profit, no, sir, your reserves and surplus will increase by 20. When you're preparing balance sheet, if liability side increases by assets by 20 rupees means asset also should increase by 20. Otherwise, balance sheet will not match. Here, debtor also will increase by 20. You're showing cost at 100, you'll show debtor at 120, like this. There will be a corresponding effect both on the asset side and liability side. Or I think I've given you a better example. Now I don't have so much time. I'm not diving into all this stuff. Whenever you make profit, net assets of the company will increase. Okay, net assets of the company will increase. If net assets of the company will increase means you will have a sad face or happy face. Because if you are owning equity shares in one company, you are entitled to get net assets of that company. If the other company ka net assets increases means your value of net assets also will increase. That's the reason if associate company makes profit means your investment value will increase. Not by total profit, but only by your share. If you own 30% means, suppose an associate company made a profit of 100 rupees. Don't increase your investment by 100 rupees. If profit increases by 100 rupees means net asset also will increase by 100. Will you get entire 100 or only your share? Your share. Investor has full control or only 30%. So 100 ka 30% is how much? 30 rupees. So your investment will increase by only 30 rupees. Like that. Only your share of profits you increase the investment value by. Is that okay? Sir, if suppose investment associate company makes loss means, if associate company makes loss means net asset will reduce. So your investment value also should reduce by total loss or only your share. Only your share. Like that. Done now. Sir, if associate company pays dividend, sir, if associate pays the dividend means what will happen to cash balance? Visualize. If associate company pays, they pay dividend, what will happen to cash balance? It will reduce. Sir, cash is an asset. If asset ka balance reduces means net asset will be same or it will reduce. Net asset will reduce. If net asset reduces means your investment value should be same or it should reduce. It should reduce. So if associate company pays any dividend, even in that case also your investment value will reduce. These are the three common adjustments that they will give you and test you in this particular problem. Okay, na sir? That means goodwill or capital reserve will not come, sir. Goodwill or capital reserve ka calculations we do, but we don't account it separately. Because here are we showing goodwill or do we show investment in associate? We show investment in associate. Goodwill or capital reserve ka calculation we do, but we don't show it in consolidated financial statement. Okay, we include that goodwill value in investment itself. How? I'll take you through one question. Is this okay? This is the one kind of problem that will be tested in your examination according to me. Can we take care? Can we do it? Can we apply it? The same thing I've written it. Whatever I'm doing in the problem, same thing I've written it as a format in this particular table. Okay, maybe one question we'll do, and if required, we'll come back to that table. Otherwise, not required. Okay, na sir. Come to this particular question, sir. Question number 1. I didn't see any RTP, MTPs relating to this. So we'll directly take the study material questions because these are things which is newly added in our syllabus. It was not there in our old syllabus. It's newly coming. So A acquired 40% in B. With 45%, will you get control or only SI? SI means significant influence. Which day you got significant influence? 1st April 20x1. How much price you paid? 15 lakh. Following is the extract of balance sheet of the associate company B Limited. Paid up equity share capital 10 lakh, security premium 1 lakh, reserves in surplus 5 lakh. Okay, till here. Sir, on the date of control, these are all share capital and reserves in surplus. 1 minute, stop there. Why on the date of significant influence, they have given all this data? Why have they given share capital and reserves in surplus ka breakup? Share capital and reserve in surplus is nothing but your shareholders' funds, which is nothing but your capital employed, which is nothing but your net assets. What did I tell in associate consolidation? Goodwill is calculated, but it is not accounted. So first we have to do the calculation of goodwill. Is the goodwill calculation new to us or we already know? We already know. How do you calculate goodwill normally? Tell me. Take the cost of investment, compare it with total net assets or your share of net assets. Your share of net assets. Can we do that first? So first, how much is cost of investment? How much did you pay? 15. Next, we need net assets. Net assets, you are working from asset minus liability angle or shareholders funds angle? Shareholders funds. On the day you got significant influence, on that day ka share capital and reserves in surplus we want. Given or missing? Given. So what is share capital? Take your calculator. How much is that? 10 lakh. Say all reserve in surplus. It could be revaluation reserve, security premium, capital reserve, general reserve, P&L, whatever. Every reserve and surplus will be taken. So 10 lakh plus 1, 11. 11 plus 5, 16. So what is your net assets? Net asset is basically 16 lakhs. This is net assets of 100% extent. Yes or no? No, is investor own 100% or only 45%? 45%. So what is investor share of net assets? 45% of net asset is how much? What is 45% of this? 7,20,000. Correct? 720 they're saying here. Correct, no? Okay. So 7,20,000 is a net assets. but the cost of investment was 15 lakh. From cost of investment, simply reduce net assets. That's what we keep doing, no? So reduce. What are you getting? 7 lakh 80,000. That is the value of goodwill. This goodwill is not accounted, but it is we assume that it is included in the value of investment. How to show it? I'll tell you. First working note, everybody clear? So this is what you need to do. This is same as amalgamation, correct? Now, how do we show this in our consolidated financial statement? First, sir, how much did you buy the investment for? 15 lakh. That means cost of investment is 15 lakh. But they won't show 15 lakh. They won't show 15 lakh. You know what they'll start with? Sir, you are an equity shareholder. You have a right over net assets. What is your share of net assets? 7 lakh 20,000. Start with that. Do you have any goodwill? Yeah. How much goodwill? 7 lakh 80,000. Add that. How much are you getting? 15 lakh. Like this, you show the goodwill. I mean, this goodwill is shown separately, or it is cost of investment only? Cost of investment. Meaning this goodwill, we assume that it is included in the cost of investment. So don't start from cost of investment. Usually we start from cost of investment, no? Instead of starting from the cost of investment, started with net assets. If you have goodwill, add. So net assets plus goodwill, if you add, means obviously you will get what? Cost of investment. So indirectly what I'm saying is goodwill is not accounted. Okay. But you show it like this. That's all. In the extract, the balance sheet. Foolish, but that's why it is doing. Are we comfortable with that? That's what we mean by goodwill is assumed to be included in the cost of investment and not shown separately. In control, when you get control, goodwill is shown separately. In associate consolidation, goodwill is not shown separately, but it is presented like this. Presented like what? Take the net, start with net assets and add goodwill. Then you will get the cost of investment. So suppose it is capital reserve means goodwill you added. So capital reserve you will minus. That's all. Then you will get what? Automatically you will get cost of investment. Like that. Okay, sir. After this, so match investment value with associate ka performance. If associate makes profit, investment value will increase. Full increase or your share? Your share. If associate company makes loss, reduce. Full your share? Your share. If associate company pays dividend, net asset will reduce. So investment value also will reduce. These three adjustments will come as an extra fitting. All the three may be there, maybe some may be there. Can we look through the question? Okay. What is it now? This full stop. B Limited has reported a net profit of 3 lakh rupees. Okay, stop there, sir. They reported net profit. When you make net profit, net asset balance will be same or it will increase? Increase. Entire 3 lakh as an investor you will get or only 45% of this? So calculate 3 lakh ka 45%. How much is that? 1 lakh? So what should happen to your investment? Same increase. Investment value should increase by your associate share of profit. Agreed? Okay, next. Associate paid the dividend of 1 lakh. If they pay the dividend means their cash balance will reduce. So their net assets will reduce. So if net asset reduce means our investment balance also should reduce. Full amount or our share? Our share. 1 lakh of 45% you do. How much is it? 45,000 you need to reduce. So the investment that will come in consolidated financial statement is 15 lakh 90,000. Remember, associate company ka assets liability will not come. But investment in associate company will come. But this investment is accounted as per equity method. This is how the equity method ka calculation is. Okay, sir. This is not separate financial statement. Don't get confused. There are two components: separate financial statements and consolidated financial statements. Separate financial statement means who's the investor here? A Limited. Only if you prepare A Limited ka data, nothing else. Pure and pure A Limited ka data if you take and prepare financial statement, that we call it as separate financial statements, or another term, stand-alone financial statement. Is that okay? So in stand-alone financial statement, my investment will come, sir. Yes, but this investment is accounted as per accounting standard 13. And AS 13 says long-term investment should be valued at cost. And what is the cost at which you acquired these shares? 15 lakh. So in separate financial statement, this investment will come, but not at 15 lakh 90,000. It will come at 15 lakh because it's accounted as per AS 13. But when you prepare consolidated financial statement, investment is not accounted as per AS 13. Investment is accounted as per AS 23. And in AS 23 says you have to value investment under equity method. And valuing under equity method, investment value becomes 15 lakh 90,000. Like this also they can give you a 2-marker MCQ question. This data they may give and say how much investment value will come in separate financial statement, how much investment value will come in consolidated financial statement. We don't have such question in study material, but just say. Okay, now understood everybody? So only in consolidated financial statement may apply equity method. In your separate financial statement may treat it as normal investment, and normal investment is accounted as per AS 13 itself. And AS 13 simply says long-term investments have to be valued at cost. Short-term investment has to be valued at cost or market value, whichever is lower, which we will cover it in a bit. That AS 13 also today only I'll take it up. Comfortable? Yeah. Move on. One more I'll do for extra practice. Sir, what if you get significant influence in stages, sir? Read. A acquired 10% in B Limited on 1st April. With 10%, will you get SI or no SI? For you to get SI, as in significant influence, you should have minimum 20%. But here you got only 10%. And for 10%, how much did you pay? In fact, when did you acquire 10%? 1st April. Then another 15% you acquired. You already had 10. You got another 15. That means now you have how much? 25%. With 25%, will you get SI? Yes. So, okay. That means this SI, you got it in one go or in steps. So sometimes you also call this as step acquisition. This is popular in subsidiary acquisition, but just say. So if you all this is there, means how to do CA final, it will be there. Okay. But now only associate, they've given the step method. Okay. First you had 10, then you acquired 15. Now you have how much? 25%. But this 15% did you acquire on the same day or later? First 10% you acquired on 1st April, 15% you acquired a few months later. Okay. Some other information they've given. Cost of investment for 10% is 1 lakh. For 10% you paid 1 lakh. For 15% you paid 145. Net assets is 850 on 1st April. On 1st October it is 10 lakh. So that means now what to do, sir? You know, sir, whenever there is an associate accounting happening, goodwill, do we account it or we calculate? We calculate. And we assume that it is included in the cost of investment, right? So calculation of goodwill is necessary. They're asking you to calculate goodwill. That's all. Okay. So here there are two acquisitions now. So how do we do it? Think that there is two acquisitions. For each acquisition, calculate goodwill or capital reserve separately. For each acquisition, calculate goodwill or capital reserve separately. So first, when did you acquire? 1st April. How do you calculate goodwill? Normal steps. Don't freak out. Normal step. How do you get goodwill? Cost of investment. Compare it with your share of net assets. On 1st April, how much did you pay, sir? 1 lakh. Correct. Compare this with your share of net assets. So 1st April, how much was net assets? 8,50,000. 8,50,000. On 1st April, did you have 25% or only 10%? 10%. So calculate, sir, how much is that? 8,50,000 ka 10%. How much is that? 85,000. Okay. Yeah. So your share of net asset is 85. Sir, investment is 1 lakh. Your share of net asset is only 85. That means you ended up getting capital reserve or goodwill. Goodwill. How much? 15,000. Okay, now like this you do it for each step. First step over. Once more did you acquire? Yes. When did you acquire once more? 1st October. How much did you acquire? 15%. So again repeat the step for 15% now. How much is the cost of investment for 15%? 1,45,000. Agreed? Okay. Sir, on 1st October, how much is net assets? How much is net assets? 10 lakh. 1 second, I think they've given here. So on 1st October, net asset was 10 lakh. How much percentage did you acquire on 1st October? 15%. So what is your share of net assets? 1,50,000. You keep it in the same format. Don't change it. It's fine. So your share of net asset is how much? 150. But how much is your cost of investment? 145. So this time around, you're getting goodwill or capital reserve. You're getting capital reserve of 5,000. First scenario, we got a goodwill of 15,000. Second scenario, we're getting capital reserve of 5,000. Net them off. Which is higher? Goodwill is 15. Capital reserve is 5. Which is higher? Goodwill. That means you show net goodwill as 10,000. Like this. That is your account. Okay, na Saru? This is another thing. So if you get the significant influence in stages, for each stage calculate goodwill or capital reserve separately and then finally net them off. So if the netted off number is a goodwill, show it as goodwill. If the final netted off number is a capital reserve, means show it as capital reserve. That will work. Easy, people. Working. So this is the problem that can come in your AS 23. Let's run through AS 27 now. I'll only revise those things which I feel has validity in exams. So we have already done in that previous topic also, we have done some 8 to 10 questions. But I feel what more or less all those are within the same lines only. So just the numbers and numericals are different. Okay, can I start AS 27, sir?